Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending January 6th, 2023. Looking at the market indexes for the week, the TSX, NASDAQ, S&P 500, Dow Jones, and Russell 2000 were all up after a somewhat volatile week. Gold was also up. Oil was the only thing that was down this week. In Canada, looking at the ongoing central bank interest rate hikes that continue to affect the markets, as the supply chain issues resolve themselves, some inflation will go away as goods become available in required numbers, which is good news. Central banks raising rates would not be able to fix those issues anyways, and lower rate hikes may be the result. Looking specifically at British Columbia, home buyers in BC now have better protection in the real estate market as the home buyer protection period of 3 days took effect on January the 3rd. A mandatory 3 business day period was created to give home buyers more time to secure financing, arrange home inspections, or fully consider whether a purchase is right for them under any market conditions, including in the face of raising interest rates and any high pressure sales. It's an action BC is taking following the BC Financial Services Authority, BCFSA, report on improving consumer protection in the real estate market. Looking at Toronto, the GTA housing market ends the year with an average price of a home at 1.189 million, up 8% from 2021. The GTA is down 19% from its high in March of 2022 when the Bank of Canada started raising rates. The GTA is plateauing now with the price stabilizing. As the economy seems to be heading towards a recession, more Canadians are canceling major purchases than previously. A Nanos consumer sentiment survey shows marginal gains in confidence over the last 8 weeks. Nanos also found the percentage of Canadians now canceling major purchases to account for rising costs, and those numbers seem to be growing, especially in the 18 to 34 age group. And lastly, Canadian job numbers came out Friday better than expected, with the unemployment rate down to 5%, where 5.2% was expected. The markets didn't seem to mind this and went up on the news. Turning to the US, 2022 was the worst year for Wall Street since 2008, as the indexes reached bear market territory and only recovered some of the losses. On Wednesday, US JOLTS job market data came out pointing to still elevated job vacancies in the US, with 10.458 million job openings, 400,000 above expectations. The quit rate also came up from 2.6 to 2.7%, showing there's a little fear among workers about not being able to find work after quitting a job. Friday, US jobs data showed a lower wage rate increase than expected, with 4.6% year over year instead of 5%, and 0.3% month over month as of December, instead of 0.4%, which was expected for month over month in December. Unemployment rate was down to 3.5%, also lower than expected. The markets liked the results, especially the lower wage inflation than expected, and took off on Friday. US mortgage rates have come up significantly, but looking over 50 years, they've come off from highs in the 1980s and were at all-time lows prior to the recent interest rate hikes. The asset appreciation over the last 20 years was partly due to the cheap money we've been having, which seems to be over now. We're now in a rate normalization period, and I believe these rates are here to stay in Canada as well. The bond markets are pricing in an interest rate reduction later in 2023, which I personally don't think will happen without a harsh recession. The US Fed meeting minutes that came out this week were hawkish, with central bankers repeating their will to fight inflation, and none of them stated seeing a need to cut rates in 2023. The market expectation of a pivot to rate cutting in 2023 may be optimistic. Turning to Apple, the usual stalwart has run into a rough patch. The premium electronics maker slipped 27% in 2022, faring worse than the broad S&P 500 index. It kicked off 2023 with a soft session as well, falling more than 3% Tuesday and finishing the day with a market value of under $2 trillion. The downward pressure appears to be coming mostly from COVID impacts in China, weighing on iPhone production, as well as more general concern about demand for Apple's pricey products as consumers grapple with inflation and the possibility of a recession this year. Looking at Amazon, Amazon plans to lay off more than 18,000 employees, far more than initially expected. In November, it was reported that Amazon, which employs more than 1.5 million people, expected to lay off 10,000 people. The move comes after several other tech companies slashed their payroll, including Salesforce, which said Wednesday morning it would cut 10% of its workforce. Amazon CEO Andy Jassy announced the staff reductions Wednesday evening after a news report about the layoffs blew up the company's plans to disclose the job cuts. Now for some high-level look at tech companies and how they are functioning in the stock market. So in 2022, technology companies had a price to earnings multiple contraction as money became more expensive and bad companies, dumb ideas, and crypto were no longer going to have to beat just 0% returns, which is the cost of money. This year, there will be an earnings contraction, meaning lesser profits. As sales come down, margins shrink, and earnings come down. Layoffs are happening to allow companies to keep their margins, but in the long run, the company has to grow their sales. That's what the market wants from growth companies. Once they stop growing, the PE will compress even further, since the market becomes disenchanted with the tech companies. So that is something to be on the lookout for when investing into technology companies. Looking at US automakers, they are counting on a 2023 rebound after 2022 proved to be the worst year for new vehicle sales in the US since 2011, when the industry was recovering from the Great Recession. Research firms estimate last year's sales were roughly 8 to 9% down from 2021 as parts shortages plagued inventories and higher prices weighed on consumers' wallets. But those same research firms and the automakers themselves are projecting an uptick in sales this year as inventories improve and prices begin to moderate. Staying with cars, the US electric vehicle market share numbers came out, and Tesla is still the 500-pound gorilla in the EV markets at 67% market share, with Hyundai and Ford being distant second and third. Do note that Tesla's market share has been decreasing over time. For the entire year of 2020, Tesla's vehicles accounted for 79% of new electric vehicles registered in the United States. In 2021, that number went down to 69.95%. Expect that the US market spotlight to fall on 3 key dates in the month ahead. The first will come on January 12th when the December Consumer Price Index report comes out. A continued slowdown in inflation may lift some pressure on the Fed to raise interest rates. The second date will be on January 26th with the initial reading of the fourth quarter gross domestic product. A healthy number may relieve those worried about an imminent recession, or it may become a reason for the Fed to maintain its hawkish rate hike path. Finally, the Federal Open Market Committee will open its 2-day meeting on January 31st. The forward-looking markets tend to focus on what the Fed Chair Powell says about the economy's direction in the post-meeting press conference. Now for some bits and pieces. Alibaba's shares surged Wednesday as Alibaba's spin-off Ant Group's fundraising plan received approval from Chinese regulators. You may recall a couple of years ago, the regulators stopped the spin-off of Ant Group. And finally, looking at next week, companies are reporting on Monday. This would be the Canadian Cannabis Tilray. On Tuesday, we have Shaw Communications. Thursday is Taiwan Semiconductor, so we'll see how the world of semiconductors is going. And Aritzia for Canadian retail. On Friday, we have United Health and US big banks and Delta Airlines. Finally, the economic events next week are largely on Thursday, where the US Consumer Price Index report comes out. So that concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.